So what is a tax lien certificate? This is something that confuses a lot of people, so don't feel badly if you're confused or trying to learn about it. They're great things to know about, and I want to pull this apart for you and show you exactly how it works and where you have a great opportunity to get great returns and maybe even to get a great property. What is a tax lien certificate? It is the right to collect the taxes on real estate as well as any penalties and interest, just like you're the government. Now you might wonder, how does that work? Well, what happens is the counties need to collect the taxes due on all the real estate in the county. Why? Because they have to pay the police, the fire, they have to fill the potholes, collect the trash, do all the things that they do, and they depend on the real estate taxes to do that. So what will happen is some people are unable or unwilling to pay the real estate taxes in any given year. And so the county will say, we need this money, how are we going to get it? And one of their options is to sell the rights to collect that money when and if it's paid. So that is done through something called a tax lien certificate. And the tax lien certificate basically lets you step into the shoes of the government so that when and if someone pays the taxes, you'll get paid. And these things can carry very, very high interest rates. Interest rates can be as high as, get this, 36%. That's a pretty high interest rate, right? So you can get these enormous rates of interest, and they also have penalties. In one state, they have a 25% penalty if you don't pay the taxes. And if you let it go another 6 months, there's another 25%. So if you let it go a whole year, you'd owe 50% more, and as the person on the other side of that, meaning the person holding the tax lien, well, you can get a 50% return. Even at 6 months and a day, you get a 50% return. So it can be a really lucrative business if you know what you're doing. So tax lien certificates are basically financial instruments. And what's that mean? It means you're not buying the property, you're buying the right to get the taxes when and if they're paid. So you might ask, well, what happens if they don't pay the taxes? Well, if the person doesn't pay the taxes, in most states, what happens is that they put the property up for a public tax deed auction, meaning a public auction. The property is sold, and then the holder of the tax lien is going to get paid their money out of the proceeds of the sale. Now, the one danger point there is that if the property doesn't sell at the auction, then you won't get your money. So you need to make sure when you're buying tax lien certificates that they're supported by a good property. You want a property that has value to it, that people, if it were forced to a tax sale auction, that people would bid on it. They'd bid enough money to pay you off with your principal plus your interest. So you want to, when you're buying tax lien certificates, make sure that the property that is behind the certificate, meaning whatever property that these taxes should have been paid by, make sure it's a good property. Some things that would say, yes, I'm going to get paid on this one, if the property is occupied. That's a much better chance that those taxes, interest, and penalties will be paid. If it's improved property, meaning it has a structure, it's not just raw land, much better chance of being paid. So you look for things like that. There are a number of factors. Those are the ones I have time to go into today, but make sure occupied property, nice property, built property, and you should be okay. The vast majority of those will get paid off and paid off relatively quickly. And then the game is that you just keep reinvesting your money to kind of snowball up. And because the interest rates and penalties are so high, you can make a lot of money on those kinds of transactions. But you do need to make absolutely sure that the property standing behind that tax lien is solid. Now, also another interesting thing about this business is that you don't have to do the collections work. So when someone pays their past due taxes, plus the interest, plus the penalties, they pay it to the county, to the tax collector. They don't pay it directly with you. They have no direct interaction with you. They're not calling you, negotiating. They're not calling to say, oh, could you take half? It's nothing like that. These rates are set by statute. They're set by state law. They're not set by you or the taxing authority. They're set by state law. So there's no negotiating. There's no going back and forth. You don't even have to deal with it. You don't have to take a phone call, none of it. They deal directly with the county. So the county handles any and all collections work. If the property has to be put up for auction because they didn't pay, again, that's not you. That's done by the county. Often the sheriff is the one that sells those properties, but it's some county official. Could be the county treasurer. It's not going to be you, which makes it a pretty passive, non-hands-on business. It's not controversial. And to some degree, you're doing a lot of good for the county because they need to collect that money because they need to pay the police, the firefighters, fill the potholes, do all that. So you're doing some good. Not that that's the reason to do this. This is really just a financial investment. Now, as far as where are these things available, they're available in about half the country. So about half the states sell tax liens, about half the states just sell tax deeds. Tax deeds are a different subject. I cover those in other videos. If you want to know more about them, just go ahead and search on my channel and you'll see plenty of information about tax sales. I do many, many videos on them. But tax lien is a little bit different. Tax lien is about getting a financial return on your investment. They can be great to do. A couple of tips. A lot of times, big and popular areas are super competitive and probably not the best place to be buying tax liens. For example, Florida is one of the biggest states for tax liens, but bidders are rampant in Florida, so generally you don't get very good deals on the tax liens there. And other places that are more out of the way, where it's not a direct flight from New York, where it's like a second or third tier county as far as population size, those are ones where better deals are available, and those are probably where you're going to do better. So when you're thinking about this business, you may have to do some research to see where's the competition less versus more, and some of the ways to do that are to just attend some sales. See, are there a lot of bidders? What are things going for? Is it hard to get liens or not hard to get liens? So you want to plan on that being part of your due diligence. The other thing I'll tell you are there's some great people who have terrific educational information about tax liens. I have a good friend, Tony, who's been doing this since, the mid-1990s, and I think he's probably the leading figure in the entire business. I did an interview with him, and I think about it, I'll put this up. I ask editors to put up the link, if possible, up above my shoulder. If you don't see the link, just look down below. I have a friend who is the master of tax liens and tax sales, and he and I sat down recently and did probably a 20-minute interview where we're talking about tax liens and tax deeds and the overage business that I do that's related to that. And I think that'd be a really worthwhile thing for you to watch next. So my suggestion is either click on the link if you see one up there, or click on the link down below and go check out that video. We get in depth into tax liens and tax deeds and what the opportunity is. And I will tell you, there's great opportunity, but sometimes it's not quite where you think it is. If you're in a big city, a lot of times what Tony does is going to be much better for you. If you're in a place that's competitive, what I do in overages is going to be better. But to start out with, go check out the interview I did with Tony, and that'll give you a good start. And I will offer you encouragement. This is a great business to be getting into. Super high rates of interest, like I said, as high as 36%. They vary state to state, but 36% is pretty amazing. Plus high penalties. I was talking about a 50% penalty in one state. So there can be amazing money in this, an amazing opportunity, but you just need to educate yourself on it. So this is attorney and investor Bob Diamond. Glad to be with you here today. If you want to know more about tax sales and liens and deeds, please do subscribe to my channel. That's kind of my specialty. And to go a little bit further into tax liens, click on the link and go watch my interview with Tony, and you'll learn a world. In 20 minutes, you'll be like hours and hours and hours ahead. So thanks for being with me, and I'll see you next time.